Yeah, welcome guys, welcome guys, welcome guys. Good evening everyone. Good morning, good afternoon from wherever you are tuning in from. Yeah. So welcome everyone. Welcome everyone. Yeah, good evening everyone. Okay. Okay. Amazing, amazing. Yeah, welcome back. Yeah. Thanks. Good evening everyone. Okay. Yeah, welcome Emmanuel from Liberia. You're welcome. You're welcome. Welcome. You're welcome. Okay, so it's sharp five from our Nigerian time, 5 p.m. sharp. So it's time already. So although yesterday video was a bit long, yeah, it was really long, 1 hour plus. So today would make it straight to the point since today we'll be talking more on risk management. I told you that Forex is broken into three aspects. You have the strategy, you have the risk management, and psychology. Those three. If you are good with those three, you are good to go. You understand? That three, you are good to go. Wow, someone said, Emmanuel said, say your strategy worked like magic. I did back testing yesterday. Yes, it works. It really works. It really works. But what you even today it happened like today there's a trade. I will show you people straight up when we kick off. Maybe that's the trade we'll use for the example, the live example we'll be doing. So that's the trade we'll be using as an example, you get guys. So in the meantime, just type the country, the city, the town you are tuning in from. Just keep typing it in the comment box while we are waiting for others to join. Yeah, let's just give them 5 minutes, guys. Let's give them 5 minutes. Yeah, let's give them 5 minutes. 5 minutes. 5 minutes. 5 minutes. 5 minutes. Yeah. Welcome, Khaled from Apaibu. Okay, FX Queen from Imo State. Yeah, welcome. Um, Hustler, Felix from Kenya, you're welcome. Jonathan, you're welcome from Sabah, Delta State. Welcome. Good to have you guys. Like, really honored to have you guys. Really honored to have you guys. Henry from Enugu, you're welcome. You're welcome. Anthony from Makodi, you're welcome. Good to have you guys. Good to have you guys. Okay. So, yeah, Peter from Oyo State. You're welcome. You're welcome. Bamidele from Lagos, you're welcome. Dear God from Delta State, you're welcome. Amos, you're welcome too. Amos from Delta, you're welcome. OOG guy. So, you're welcome from Lagos, Nigeria. Welcome. Good to have you guys. Good to have you guys. Like I'm really happy to have you guys here. Okay, so let me just do a real quick sharing of the link for others to join. So we have 2 more minutes to go. Once it's 5:05, we are kicking off. We are not waiting for others to join anymore. We're just going to start at once. Then maybe they will join us or watch the video later as they wish, guys. Yo, I think my audio is good now. I don't know. I also see someone say, did you test your audio? I don't know, but you can hear me because other people can hear me clearly. That's why they are typing their location. Yeah. So I don't know. So hope everyone can hear me. If you can hear me clearly, just put a yes on the box if you think the audio is good now. So I will know before we kick start, so that I will know if I should use a separate phone for the audio or a separate audio gadget. Yeah. Okay. Let's go. Yeah, you can see everybody can hear me clearly. So, guy, I don't know if it's from your end, but if it's from your end, maybe we should just work on it. Yeah. Just work on it. Okay. How many minutes to go? One more minute to go. One more minute to go. Okay. So it's time, guys. Yeah, welcome, Brax from Ghana. You're welcome. You're welcome. You're welcome. You're welcome. Okay, someone said Felix again. Felix said something too. He said, I caught a good trade with the strategy you gave us yesterday. After this, after today's US news, it's worked like pro, bro. Yes, it's worked. I saw it today. Let me show you the setup real quick. Let me show you the setup real quick. Let me start sharing my screen. So I'll just go straight to today's topic because we are talking more on risk management. We talked on strategy yesterday. So in case you missed yesterday um, training or video, just go to my YouTube channel, click on live, and you will see yesterday's training, yesterday class, the video. You understand? So today we'll be talking more on risk management, strictly risk management. So let me share my screen real quick. Okay. Um, can you see my screen? If you can see my screen clearly, just type, just keep typing just type yes, 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 yes. If you can see, amazing, amazing. Yeah, you're welcome. You're welcome. You're welcome. So if you can see my screen, just keep typing yes, 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 yes. So we'll just head straight to the screen. Okay, amazing, amazing. Sorry, I don't have a physical class for now. Chinaza is asking if I have a physical. It's strictly online for now. Maybe as time goes on, as God may lead, if God leads, I should open one. I would, but if not, I'll still just stay online. Yeah, I'll make it online for now. Yeah, so fast the knowledge is still being passed, so it's good for me to get. Okay, so let's head straight to today's topic. So I'm going to clean my chart here. Let me take this thing off real quick. So I'm going to clean my charts and make it new again because we're not talking on strategy again. So we are talking on risk management. This is one of the problem. This is one of the things that makes most beginners traders lose in the long run. This is just one of it too. Yeah, tomorrow will be the final day. We'll talk on psychology. So it's more of a discussion tomorrow. So don't miss tomorrow. Even if you missed yesterday and your data is doing somehow today, try not to miss tomorrow. It's going to be great. Yeah, great. Actually, it's going to be great. Yeah. So this is the chart here. This is the chart. So today I saw a trade setup. Now, if you look from this place, you will be like, I didn't see any break and retest here. Yes, there is break and retest. We saw one here, and this was actually the one that happened. Was it yesterday? This one happened yesterday. So let's see. There's a break and retest from this previous zone here. So now, apart from this, again, there is other one that happened here before this drop happened. So if even if you missed the whole buy move, you wouldn't have missed the sell. Now let me show you something too, real quick. And something is about to happen here, guys. This particular setup. If you notice the wave pattern that I showed you guys, if you notice the wave pattern I showed you guys, it's about to happen here. After this drop now, after this drop, at least to this level, there will be a push to this level. Then we'll see that the trend will start changing, and we'll be having more of sales very soon, very soon. That is if this place is respected, because I know it should not exceed this level, then shoot up to this point, then it dropped. Remember the wave format I showed you guys? This was the recent high, so it took out that high. Instead of it to retest at that point and start going up, it came back to retest this low here. So I said in this kind of pattern, your TP shouldn't be beyond this level. And from there, because something is about to happen, because it's taking out some key levels, you understand? It's taking out some key levels. So for those that were here in yesterday's class, you understand what I mean here, what I meant from what I just explained here. So now this drop here, we caught it. It was very clear. Like the drop was clear. Now let me just go. I don't like drawing too much stuff on my chart, but let me just show you guys. how I managed to catch this particular trade, this sell. So from this point, yeah, you see that the market has been trending up. This is the 1 hour time frame. I just want to do a quick breakdown before we go straight to, let me just take, you see that the market has been trending down. Let me bring it up from this low, this previous week here. Let's make it touch at least more. You see a touch here, a bounce here, and you see a break here. But apart from that, let me still show you how we managed to carry sell, because there's no break and retest. You'll be like, where's the break and retest that made you to sell? Why do you so? You understand? Now let me show you guys. Okay, so jumping down, this is what happened here. This is what we've seen. You understand? We saw this was a, this is a level here. This is a level also in the smaller time frame. Let me show you in the 15 minutes time frame, because this was more like a scalp, but we held long. Yeah, we held long. Let me show you guys. So on the 15 minutes time frame, this point was respected. We had a huge double top here, a huge one here from the bigger time frame. It's also clear. This huge double top here, and we had something like this, like this. I know. I guess you didn't see it. Some of you didn't see this pattern. More like a ascending triangle. Something a bounce here, thing and bounce, went up, bounced up again. Hope you guys are pulling up. You're pulling up. So it's more like someone is saying I should do a top-down analysis. This is more like a top-down analysis, more like a top-down analysis, because I started from the flat time frame. So now you see a bounce there, it came down, bounced, went up, came down, bounced, went up. It's kept respecting this area. So from this pattern, you know if it should break out, you should retest there and start buying. But it failed to break out, you understand? Instead, this low is created here. It respect this low is created here before shooting up. You can see that low here. Let me mark our entry positions. So guys, this strategy is very simple. Just keep back testing. Just keep back testing. So you see that low, it took it out. Let me zoom in. I want to zoom in, even if it means going to the smaller time frame, 5 minute time frame. So, but this is the 15 minute time frame. Now you see that low, it's here, it came out, it took it out. You understand? In an uptrend, it's not supposed to be taking out previous lows, you understand? So it took out this one. And this point was very strong. This was the recent high that this thing respected, because it was like break, came back to the test at this level before pushing to the upside, but it failed to break this level, you understand? Instead, the low it created, it took it out. So I knew that no, this thing is changing. What do we see here? This trend line got broken at first, you understand? Then there was an F and R zone here, which means trend line break, a retest on the F and R zone. And if you should look very well, you'll see that psychological level is close by. Psychological level is what? Close by. Let me put it, no, psychological level, we talked of it yesterday, random numbers. This one here. So you see most of the time, why I don't like drawing them most of the time. Okay, so that's one day. And you remember this is a smaller time frame. Now let me show you how this ruler to here, calculate 50 pips from there. So graph, so it shows 50 pips. So there's another one there. But most of the time I hardly use them. But it's always there. So psychological level is close by. So now you see that this level where this market was expected and turned back, there was a psychological level. You even see this level where there was psychological level, the market reacted there too also. You understand? So psychological level was here and this market dropped from there. So a break and retest here, almost close to that psychological level, but I will still count it as one of the compensations because it's close by already. You understand? So let me take it out so the chart don't look messy. Okay, so so we saw that pull, it broke this trend line, broke this zone, took out this low, you understand? Came back to retest. So with this weak rejection alone, apart from weak rejection, you know, we use pending orders most of the time. So we were in, like I was in for the short. I can show you the screenshots. I had the screenshot is on my phone when the market was at this level or so. I had the screenshot on my phone. And now, when we were expecting to below the box, you know how we do it. at least above that box a little bit. So now, where was our CP? Our CP level. One was, let me show you from the bigger time frame. We don't just put TP anywhere. We put it at sensitive areas. This was the recent, this is a level, this is a level. So these 2 points here, this point here was a level where the market will react once it gets. So this was where our overall CP was, at least that level. Yeah, this is it. So it was more of a 1 is to 11. You can see that 1 is to 11 risk to reward, and it was very fast. Happened, and everything played out very fast, very, very fast. You understand? So the entry was on the 5 minute time frame because that was where it was a bit clearer. You see the 5 minute time frame. So it was a bit clearer on this 5 minute time frame. Yeah, this is how the trade played out and it's T. So that was it on this. But now let's talk on risk management because today's class was is more of risk management. Yeah. So today is more on risk management. So now how do we know how much we are bound to risk, and that in a case that when the trade goes against us, we won't lose more than a particular amount. This is where risk management really plays a very vital role. You get. So risk management also helps you to being able to manage your risk. Before I place a trade, how do I know that okay, if I play this trade, I won't lose more than this particular amount. I have a $10 account. I want to reach only $5. But how do I know that if this trade should go against me? I will only lose $5. Like if it hits my SL, I would only lose $5. So just keep listening, guys. Just pay close attention. You understand? Pay close attention. So now let's go back to the chat real quick. Okay, let me open it from this window here. So the particular platform I use, it's my FX book position size calculator. Let me share the screen to that point still. My FX book position. Let me share the screen real quick here. Okay. Sorry, guys. Yes. So, yeah, this is the platform here. This platform, this is where we calculate our risks, especially on gold. You know, I deal on gold. So if you notice throughout this training, I just want to make it focus on gold. Yesterday I said I would do a little bit of GDP, but no, no, no. Let's just focus on gold. Let's don't get distracted because GDP patterns are a bit different from that of gold. You understand? So this is the platform I use. My FX book. Just go on Google, type my FX book. This platform. Let me remove this stuff here. This is the link here. My Facebook. Let me just copy it and on paste on the comment box there. So that's it, guys. That's the website. My FX book position search calculator. If you don't know, just go to your position and your Chrome, Google Chrome, or Safari, or any browser you are using via Firefox, anything. Just go there, type my FX book position size calculator, and it will bring you to this page, this particular page. So what you should do now, once it brings you to that page, look for the pair you are trading, which I trade gold. So I'll just go look for XAUUSD. That's the symbol for gold. XAUUSD. This is it here. XAUUSD. This is it here. So now the currency type, maybe you choose your currency. Maybe your account is it in USD? Is it in Australian dollar, CAD, Canadian dollar, or Swiss francs? Any one, Europe's GDP, that is pounds, anyone, but for us, it's majorly USD. So now, would use a particular account size as an example. Let's use a particular account size as an example. Let's say, for instance, we have $100 account. Okay. Let's say, for instance, we have $100 account. Um, let's go back to our listing Chrome. Okay. Let's say, for instance, we have $100 account to trade on this particular trade, and or let's use $100 account because it's a bit random. Let me go back to the 15 minutes time frame. So, and this trade came up. This is our first trade on that particular account, on that particular $100 account. This was the first trade that showed up. So, what you do now is First of all, how many pips are you risking? That's what you should ask yourself. First of all, this trade, how many pips is it? Is the SL? You don't need and you don't need to know the how many pips for the CP, but sometimes you might. But the most important one is the SL. So I will show you how to know the particular pips calculation. But I said before, if you if you don't know how to calculate pips on gold, I made a video on YouTube. What you should do, just go on YouTube, search for how to calculate pips on gold by Samatoshi or Samatoshi how to calculate pips on gold. You see the video, you see it clearly. You get so now we have $100 account and you want to take this trade and we are ready to risk, let's say $10, which is 10%. It's fair enough. But me, I like going against it. I might end up risking 50, 70, depending. But let's say, for instance, like normal, you don't need to risk too much. Some people might even want to risk $5 because it's like their hard-earned money, and which I understand. You understand? So let's say, for instance, we are risking $10. We want to risk $10 on this trade. So what you should do is pay attention more to the stop loss position. So you could see the stop loss here, 2045. You could see the entry, this orange line, 2043.49, and the TP, this green one here, 2022. But all those ones is not in there. That's when you want to send signals to people. But okay, or when you want to put spending orders on your chart, on your MC4 or MC5. So if you tap on this entry symbol or tool, this entry tool, yeah, let me see what it's called from this point. This long and short positions, yeah, long and short, but this one is short because we are selling. Selling is for short, long is for buy. So this long and short position, this shorting position here, if you tap on it, you would see that it brings out numbers. Let me zoom in so I can see it very clearly. Let me zoom in very well so I can see clearly. So let me tap on it again. You could see now it's brought out number. You could see the risk to reward here. 1:11, which means if you are risking $10 on this trade, you should be coming out with 118. Let me make it simple. $110. Let's put it that way. 10 times 11, that's 110. If I'm not mistaken. Yeah, 110. 10 times 11. Yeah, so that's number one thing there. The risk to reward. The risk to reward. I told you it must be at least minimum of 1:2 in order for you to come out profitable in a long period of time. You understand? You need your risk to reward must be at least 1:2. And I will explain all that because in today's class we are talking on risk management. So talk on everything how to do all that, guys. So now this is it. Let's go back. So after you have noticed the risk to reward, okay, the risk to reward is fair enough. So this trade is it's good to take. You understand? So the next thing you should do is pay attention to this point, this red line now. You could see stop 1.780. Stop 1.8. This stop means the stop loss. The stop the SL number. This is it. How many pips are we risking? For gold, if you see 1.7, 1.7 represents 17 pips. 1.7 represents 17 pips. If you have 11.7, 11.7 means 117 pips. If you have 0.7, it means 7 pips. I'll say it again. This 1.7 here represents 17 pips. If it is 11.7, that is 117 pips. If it's 0.7, that is 7 pips. If it's 0.8, 8 pips, 0.9, 9 pips, 1.0, 10 pips. So hope you guys are really understanding. Yeah, so it's really simple. No need of you starting to how do I calculate it, how do I calculate it. It's very simple. So it's straight to the point, yeah. So take note. So 1.7 here means 17 pips. So we have known the stop loss position. That's all what you need. That's all what you need. The two places you should pay attention to is your risk to reward and the SL points. You understand? Risk to reward, SL points. I don't have a fixed stop loss points because trade setups, I only put my SL depending on the kind of market condition or the setup the market is giving to me. Sometimes it might be 50 pips. Sometimes, but mine is that the risk to reward should be worth it. Once I see a place where I know that this market can would get to, and I put my TP there, and I see that it's just 1.1 risk to reward or 1:1 risk to reward, I won't take the trade. It's not worth the risk. You understand? It's not worth the risk. So on this trade, it is 1.7 this thing, 1.7, which is 17 pips. So let me make it more practical. Let me just be writing it down. Our trading account is $100, and we are ready to risk $10. You understand? We are ready to risk $10, and the stop loss for this trade, SL, which is it also means stop loss, is 17 pips, and the risk to reward. You can just put RRR, risk to reward ratio, is 1:11. 1 ratio 1:11. That's 1:11. So now this is what you should pay attention to. Now what you do now, you should go next back to that position size calculator. So okay. Okay, yeah, I'm just reading the comment. So now what you should do now, since you have already known the L cell, the stop loss this thing, pips, you should now you go back to this place now. Let's show you guys. Go back to this position size calculator. Um, my FX book position size calculator. Come back to this place now. Yeah, you could see you put the currency, which is gold XAU USD, the currency, our account currency, which is for me, I normally trade in USD, sometimes in Naira. Yeah, but Naira is not here, so it's USD. So put the account size. The account size is what? $100. The risk, how many percent am I risking on this trade? $10 is 10% of $100. You understand? But if you don't know the percentage, no need cracking your brain. Just click here, swap with money. Once you click swap with money, write the amount since you know the amount already. So it's $10. I know the amount. I don't know how many it is percentage. I don't know the percentage in this $100. So, but I know the amount. Just click here, swap to money, swap with money, and put $10. So now this place stop loss pips. Remember it's what? 17 pips. 17 pips. Now, this is where you need to pay attention to after you've filled in this place. This trade size lot. The normal lot size for MT4, like the normal lot size we use is 0.01. The minimum is 0.01. You understand? Lot, you understand? But here you are seeing 0.001, which is nano lot size. But what you should do, just come here, remove 10 and make it look normal. The normal minimum lot size we use on MT4. You can see 0.01 lot size. So once you remove 10, it becomes 0.01 lot size. Then click calculate. So once you click calculate, it tells you the percentage. That $10 is percentage inside that $100. Percentage is what? 10%, like I said. Now it tells you the sizing stands for the lot size. So this is the two you should pay attention to. The risk ratio, that is, it's showing that $10 is 10% of $100, and the sizing is telling you the lot size you should use. Don't use beyond this lot size. 0.06. 0.06, guys. 0.06. So you see now, some people will just go play 0.03, 0.03, 0.03. They have gone beyond it. So if you are losing, you will see that you might end up losing way more than $10. So in order not to lose more than $10, just go put 0.06. Leave the chart. Just once you put that stuff there, go back to your trading view. You see the number where your stop loss is. Right there, put your stop loss, because most of the people don't like putting stop loss, and they end up maybe a trade reverse and hit them out, or end up going their accounts. You get. So always put your stop loss, guys. Always put your stop loss. So this position size calculator tells us to use 0.06 max. So I'll just let's go back to our chart. Okay, let's go back to our chart. So now, once you come back to this chart, this is your entry point. You just put 0.06. This is your stop loss point. This red line, this red markup here, 2045.22. You put it there in stop loss. Then you put your TP. The TP is the green one, 2022.30, and you are good to go. But if you want to know how many pips you are winning, you know our stop loss here is how many pips? 1.7. So the TP here is 21.1. And I said when you see 21.1, it means 211. So they are risking 17 pips to get 211 pips. Mad risk to reward, guys. Mad. It's a good risk to reward, guys. So some people are asking, someone is asking, can we split it like 0.01, 0.01 in 6 places? It's still the same thing to me, but remember, once you split it, this the disadvantage. Now, let me talk of the disadvantage before we go to the advantage, because everything has disadvantage and advantage. So, if you are setting a pending order, there's no point splitting it. And also, if you're not setting a pending order and you're using instant market execution, remember the market will not just come and stay at one place and wait for you to place all your 0.01 in 6 places. It will be moving. So imagine it come, it went up, you put 0.01, it came down, you put 0.01, it went up, you put. If you are losing, you might end up losing like 12 or $13, depending, because it's not at one position, it's changing. You understand? As the more it's changing, the more the pips is, their pips are getting different. You understand? So if if it's fine with you, good. But that I use that majorly when you are doing color using cost averaging. That is if you want to start, you understand. But mine I do more of trailing stops, like adding more positions at retracements, you understand, and moving my stop loss into profit. So that's it. But just one entry. I do one entry on gold. It's only on GPUs that I can do something. I can just do that, split it to 6 places, but it's still the same thing. If it goes against your racing, you are still losing $10. But the only problem there is the market won't wait for you to place it, except you are using pending orders. And even if you are using pending orders, it's still the same thing you are going to lose. It's still the same thing, guys. So that's one. Now, hope everybody understand. Hope everybody's following. Everybody's following because I just want everybody to understand this stuff. I want everybody to really understand this stuff with it. So now let's go back to our chat. So now that's it for this particular one. Now, why do I like saying like even yesterday I made mention of it. Make sure your risk to reward is above 1:2. Minimum 1:2. Now this is the reason. Let's go back to this particular account. Let's say we have $100 account. Yeah, we have $100 account and our risk per trade is $10. Risk per trade. So it takes 10 losses for you to wipe down that account. You understand? So now let's say with our risk, we have $100 account. Our risk per trade is, let me check this here. Our risk per trade is $10. Let's say we entered 10 different trades. Now, let's say we entered 10 different trades. We took 10 different trades. Took 10 trades. Now, the wins, we had 5 wins and 5 loss. 5 wins and 5 loss. So now, let's say the risk to reward is 1:1. Let's start from 1:1. Now, this is why I used to say don't use 1:1. Make sure it's at least 1:2. Let's say the risk to reward is 1:1, which means when you are winning $10. When you are losing $10. So we had 5 wins, 5 loss. Let's say we had 5 wins and we had 5 loss. Okay, so 5 wins means 10 times 5 because the risk reward is 1:10. I just hope everybody to understand it. And we had 5 loss, which is also $50. Sorry, let me change this one back to $50. So this also $50. So at the end of the day, you would come out with what? You will come out with profit after that 10 different trades. You see that you didn't come out with losses. You end up coming out with your no, just break even. Because the 5 you had, you win 50, you lose 50. You understand? It's zero. It's zero. No profit there. There's no profit. It's zero. The profit there is zero. Let me just put it quickly so everybody will understand. The profit there is zero. $0. $0. Profit. $0. You won $50 and you lose $50. So you see why that 1:1 risk to reward is very, very dangerous. Now you see why 1:1. Risk to reward is very, very dangerous in the long run. Imagine after me stressing myself to place 10 trades, guys, 10 trades, and 10 trades might be 2 weeks because we have, let's say you take one trade every day or two trades every day. Only for 2 weeks you came out with zero profit, guys. Imagine yourself. Go through it again. Like think of it, think about it. So now let's go back. And sometimes you might not have 5 wins and 5 loss. Now let's go back. Let's go back. So now let's say we had 4 wins and 6 losses, which is very possible. Very possible. So it means you won $40 and you lose $60. So you came out with profit. No, you came out with minus $10, which your account size will become what? $90. $90. Imagine. So instead of winning after 10 whole trades, you see that your account is getting down. That is if you are using risk management. So for some people that don't know, does not even know what they are risking, or they might end up blowing their accounts within that 10 trades. It might not even be up to 10 trades. But if they are using risk management, you see that you come out with minus $10. So it's very bad. 1:1 risk reward. Clear away from it, guys. Let me use that word. Clear away from it, guys. Someone is saying my screen is not clear. Just I don't think it's from my end. What you should do is click. There is the top right corner. There is a settings icon. Settings icon, and just click on it. Click on quality and choose the better quality, a good quality, the higher resolution quality, and it will become sharp again. Okay, so that means you lose, you win $40 and you lose $60. You came out, it's not even minus 10, so I'm mistaken. Minus 20, 60 minus 40. You get, so you even came out with losses. You came out with losses, you understand? So that's it now. Now let's turn it. Let's say your minimum risk reward is 1:2. And let's see how it looks like when your risk reward is 1:2. You had 5 wins. You still want to do that same example, right? 5 wins and 5 losses, which means when you are winning times two. You know our rate is $10. So when you are winning, we are winning times two of it, times two of it. So 5 times 20. That means when we won $100. When we lost $50. You come out with profit at the end of those 10 trades? Yes, you came out with what? $50 profit, guys. $50 profit. Now you see this. Now your account balance should be 150. So now you see, even with 5 wins, 5 losses, you still came out with win. You understand? You came out with profits. You understand? Even with 5 wins and 5 losses, you still came out with profits. So you see the difference in risk to reward. Risk to reward plays a very vital role in risk management when it comes to risk management. Risk to reward. What am I risking and what is the reward ratio? You understand? So pay attention to this, guys. Now let's still do this other example. Let's say you lose 1-4 and 1-4 and you lost 6. So this 6 is what? $60. And the 4 is what? It should be $80, right? $80. Yeah, if I'm not mistaken. 4 times 20, $80. So 80 minus 60, you still came out with profit, guys. Still came out with profit. Still came out with profit, guys. Still came out with what? Profit. 80 minus 60, you came out with $20 profit. So you see that in the long run, your profits would still keep you way up, way up, way up, way up. You understand? It will still keep you way up. You understand? Now let's say for instance you are using 1:3 now. Imagine when you are using 1:3. Just go back. I don't need to do the calculation again because it's taking more time. You understand? Just imagine you are doing 1:3. Do that one as an example. You understand? Do that one as an example. Someone is saying I should change the fonts to black color. Let me do that real quick. Sorry, to be clear. So it's done, guys. Black color. Should I still do any other settings? Should I make it bold? Let me make it bold. Okay. So it's now bold. So hope I settled out. So that's it. That's it, guys. That's it, guys. That's it, guys. So risk to reward plays a very vital role. It plays a very vital role. I will keep sound if it means if this is only what you learn in today's video and how to calculate your to know the tips you should use, to know the lot size you should use before placing a trade in order not to lose more than what you are ready to risk. If that's the two things you would get in today's life, then I've achieved something. You understand? Yes, then I've achieved something, guys. So always pay attention to your risk to reward. Don't go for a trade that is like this, this, like this, something like this. What is this to me? In the long run, if you keep doing this thing, you might end up not coming out with something reasonable. You might end up instead of climbing up, you'll be going down, going down. But imagine sometimes, let's say now, let's do the opposite. We were saying we had um 4 wins and 6 loss. Now let's say we had 6 wins. Let's also think of it that way, and 4 losses, which is very, very possible. Sometimes in a week we don't even have losses at all. You understand? But let's be sensitive. Let's just make it realistic. Yeah. Let's say we had 4 wins and 6 wins. That means you came out with $120 and lost 40. 120 minus 40, you came out with $80 profit. Almost double to the account. So guys, so guys, pay attention to this. Pay attention to this stuff. Always know what you are reaching before you place a trade. Before you even go and place any lot size on your MT4 or MT5, before you place it, always make sure to calculate your risk first, know the lot size you are using so that you won't lose more than what you were. Because once you start losing more than what you were ready to lose, it start affecting your psychology. It will really mess up your psychology. And the next day you might get afraid to place trade. That's just the fact. The next day, when you would see a trade that would have gone in your favor, you would be busy having fear that what if it goes against me again today? Because yesterday the loss was too much. It started affecting your psychology. And bad psychology in trading really kills. It kills. It really kills. That's why you see psychology is the overall. It has 60% in whole of Forex. It has 60% because it's very dangerous. If you have a bad psychology and you have a good strategy, good risk management, but so far as your psychology is bad, guys, in the long run, guys, I doubt you will be able to be profitable. Very, very. I'm not sure you would be able to be profitable. So, guys, this is it. That's it. That's one. Let me also show you how sometimes, let's say for instance, this trade, it was something like this. Let me go back to the bigger time frame and set it the way it was. Okay, now this, so 1 is to 11. Now, this is how we also, if let's say for instance, if you want to maximize your profits. Okay, we know if you are risking $10 here, we would be coming out with $110 on this trade. But how do we make it in a sense that we would be able to make more? You understand? Because the aim here is to maximize your wins and minimize your losses. That winning trade, it's sometimes it might be once in a while. You understand? A good risk reward might be once in a while, but how do I maximize it to make more profit? Now it's just simple like this, something like this now. So on this particular trade, let's say for instance we entered it from this point. Let me go to the smaller time frame because this was our entry time frame. So I'll pay attention to it more. So we took that trade off this point here, off this point. So I start coming to this level, as it start coming to this level. Just pay attention to retracements, you understand? Pay attention to what? Retracements. The low it's created, the new low it's created was at this point. If you look very well, the minimum low was here. It went up, came down, went up again before it started dropping. So that point, that's what the market came back to retest from this level. You understand? So as the market created this low, went up, on coming down again, once it take out this low, I move my stop loss. You understand? and I put it here in profit, which means this trade is risk free. You understand? I'll just move the stop loss into profit. You understand? It will be a risk free trade. It will be something like this. This way the stop loss will be now. I will keep it here. You understand? So as this market keeps doing this, it came down, went up, do a little retracement. Coming down again, I'll add more positions because it just took out this recent low it's created here. You understand? It just did what? Took out this recent low it's created here. So I'll add more positions here. The position I will add would be something, maybe the risk I was risking here. That's 0.06 that the this thing position calculator say I should use in order to lose $10. I will put it here again. I will risk $10 here again. Which why? Because this first entry now is risk free. If the market should go up, hit here, it will hit me out in profit instead. But since you added a position here, I would be like risking another $10 here again. You understand? So sometimes the profits from year to year might cater for the loss of these points. So if it hits you out again, you might end up breaking even. That is $0 loss because the profit from year to year might cater for that one you are reaching at this point. Hope you guys are following. You understand? So new entries at this point here, new entries at level, this level here. So I'll add more positions here. So remember this is a low. As it keeps coming down, it came back, it resetted that level again, came down again. As it took out this one again, I'll add more positions. And the more I'm adding more position, the more I'm moving my stop loss. Now this stop loss is no longer here again. I'll move it to this point. So as I added more positions and it came down again, this one said came down straight to TP. So there's no point of breaking even. So you see that if you add $10 here again, let's say a new entry here. Let me show you how you will make more profit here. So there was a new entry here. Your stop loss was above this place. Sorry about that. Above this level, because that was where our stop loss was for when we broke even. And our TP, it's still this point. So this particular one alone is 1 is to 4. 1 is to 4, basically. And remember, we added more positions here again at this level as we took out that place. Stop loss above this point too. TP. Yeah. This one said it's not, although this one is like adding more positions. So the risk to reward doesn't really matter, you understand? Because this was a recent low. So I would also draw a box there, recent low, and the market came to retest that level. Stop loss above there. Even if you didn't enter this one, let's remove it. Let's say if you only added positions at this level, with another $10, it means this one is 1 is to 11 risk to reward. They are coming out, if this one hits TP, this particular entry hits TP, they are coming out with 110. This also one, if it also hits TP, the way we added 2 positions, they are coming out with what? $40. So $40 plus 110, that's $150. So instead of you coming out with $40, you came out with what? $150. So that's just majorly how to add more positions in order to make more profit. So it's risk free because you are breaking even. You are moving your stop loss from loss to profit, from loss to profit. So the worst case scenario is if it goes and hits you out, it hits you out with profit, guys. In case you came out with profit, so no loss. It's risk free trade, so you can hold it from there to the end, guys. So that's it, guys. That's it on risk management. I don't want this video to be really long. It's already getting close to 1 hour. So if you have questions, guys, just start dropping questions. Let me start answering questions. Yeah. If you have questions here, just unmute and I'm sorry, just type it on the comment box. Just type it in the comment. So drop your questions, guys. Drop your questions. If there is something that is still bothering you about today's class, just okay. Someone said I should repeat how to stack in new positions. So before you even start new positions, let me make mention of it. Make sure you already know what you are you are risking. Someone said I should um, repeat how to add more positions. So before you even add more positions, I only add it at retracement. You understand? So this was a recent low here. Before this market went up, pushed down. That's what this market came to retest. Yeah. So on coming back again, it created a new low, went out, taking it out like taking out that low. I will add more positions here. The same position I added here, I will add it here again. That means I was risking $10 here. I'll be risking $10 again here. That is 0.06 again. Then move this stop loss from here to profit to this recent low here. This recent high, sorry, that is created. I'll move the stop loss to this place, which means this trade, this particular entry now is risk free. If the trade should go now and hit it out, it will hit it out with profit instead of losses because you have moved your stop loss from loss to profit. So I'll add more positions here. You understand? So it came down, went up, retraced. Coming down to take out this level, I would have added more positions. You understand? Here again, and move this stop loss from here to this recent level here. You understand? As it keeps dropping, I move this stop loss from here to here. So always add more positions. Let it be a calculative position because what if you reach 10 here and you came here to reach 20 or $30? You understand? If it goes against you, you might end up maybe losing because from year to year it might not be bigger than $10. You might end up losing 20, you understand? So make it calculative. Only add the same risks or that's why they say it's very important to have a trading plan. We'll talk of it tomorrow. A trading plan. So which contains your trading rules on this particular account. How much am I going to risk? And if I'm going to add more positions, like you understand, to make more profits, how many percentage should I be adding? You understand? How many trades should I take in a day? That's what the trading plan should consist of. You understand? So that's it, guys. I don't know if you understand. Okay. Someone said, "Are you?" Let me look for other questions first. Let's go to other questions. Um, Personally, what time frame do you use for um, entry time frame? My entry time frame majorly are 15 minutes and 5 minutes. 15 minutes, 5 minutes. 5 minutes is when I just want to scalp. I don't want to hold long, and I want to maximize the profit. You understand? In the sense that I want to reduce the stop loss. It will be very calculated area and scalp and make good profit, good returns. That's I use 5 minutes for scalping. I use 15 minutes. All is the same thing. Even if I see the trade on from a bigger time frame, I want to place it on 15. I might just end up placing it in 5 minutes. You understand? But those two time frames are the time frames I use. Those are my entry time frames. Okay. Someone's okay. Another question here. Um, on which site can we make analysis for the synthetic you trade? I trade Moon and Dom, which is the one Kwaku Broker offers. Okay, so it's not available on TradingView for now. It's not available on TradingView for now. So what I do is my laptop, the one I use, MT5. It's on MT5. So I just log in my MT5 on my laptop, so the screen will be wider and analyze it day on MT5. You understand? So that's it. Okay. You on IG? Yes, I'm on IG. This is my username. You can follow me up, guys, at Samotoshi, or if you have any other issue, you can just chat me up on ID at Samotoshi underscore NG. So yes, I'm on ID. Okay. What other questions? Um, said USD JPY and GBP which is better? Oh, guy, it depends. It depends. Some people might be really good at GBP and US not good at USD JPY, which means GBP might be giving a profit, USD JPY might be taking a profit. So it depends on the kind of person and the kind of pair movement he loves. You understand? So all depends. If GBP favors you, then it's good for you. It might not favor me. If USD JPY favors me, it's good for me. Yeah, it might not favor you. So it still depends, guys. Both of them are better. Two of them you still can make money. You can still make money from both. You understand? There's still much money inside both of them. Okay. Someone said gold is the best pair to trade. It obeys more than most of the pair. Yeah, gold. I don't know why people like saying gold is risky. To me, gold is one of the most easiest pair because on every movement you should know what it's doing because it moves from zones to zones. Move from zones. Just don't just move anyhow. People like before you know it's buying. No, it's respects a lot. It respects a lot. You understand? It doesn't just move anyhow. It doesn't just move anyhow, guys. Okay, so how do we use the strategy? This strategy on an option. It's the same thing. It's almost the same thing. Let me see if I can see an option example here. It's the same thing. When this market it came here, it created a new low, it went up, came down, it retested that new low, you buy. It's the same. This one itself is 5 minutes time frame. Let's go from the bigger time frame. Let me look for a particular setup to and show you guys. There was a particular setup I took during the CPI news and it respected crazy. It just came activated with a week and move. This is it. This is an uptrend. Clearly, this is an uptrend. You understand? This was the previous low. The market shooter came back, retested that level, and went up. Still respected it. Let's look for that one again. So it's just the same thing. Just go to your chart. You know, we talked of this yesterday. We made mention of it very well yesterday. Go to your chart, go back on an uptrend, see how the market obeyed that strategy setup, see how it obeyed it, and see that you get used to it. Because it's more good when you are backtesting, it gives you confidence. It gives you this belief, yes, I know what I'm doing. Imagine I backtested my 3, 5, 10 trades that I backtested all went in profit. Imagine if you were trading like just doing that thing, guys. It's crazy. It's crazy. So you learn more when you are doing it yourself. He said, explain. Prince official said, explain calculating gold pips again. I didn't really calculate gold pips, but let me just show you again. Let's just recap real quick. Okay, let's use that entry as an example. This particular entry, because if you want to learn how to calculate pips, I have a video on YouTube. Just type, go on YouTube, search Samotoshi, how to calculate it, and it hits on gold. So this particular one, once you tap this long and short position, this is a short because sell is short. So you would see the stop here, 1.7 pips, 1.7, sorry, which represents 17. 1.7 represents 17. And the TP here, you will see target, which is the TP, 21.0, which means 210 pips. 1.7, 17 pips. If it was 11.7, it is 117 pips. If it's 0.7, that is 7 pips. 0.88 pips, 0.99 pips, 1.0, 10 pips, 1.0, 110 pips. You understand? It's very simple. Let's see the second one. The second one is 3.8, 38 pips. The TP position is 1.15.8, 158 pips. So it's just simple. Simple, guys. Simple. I hope you understand. Okay, let's look at the questions again. Up and I answered them. How do you which honesty is asking, how do you do your overall analysis and where to take trade? I just did that now. If you came late, just go back to this video, or maybe after this live, come back on this video. Watch the way I did this top down analysis. I started from bigger time frame. We saw the double two bounce, we saw that symmetrical triangle that's going to the upside, you understand? So a break of that trend line, the way you come down, then after we see a break, we look for an F and R zone, wait for it to retest and ride its way down. So it's simple. Training is not really hard. You are the one that like complicating it. You just bring this one, we add, you bring this one, you bring this idea from this person, you learn, you bring the idea from. We forgot the fact that two of them are using two different strategies. So at the end of the day, we carry two different strategies and put in one our own one one trading chart. I say I'm not saying it's not good to learn from different people. It's really good. Yeah. When I started, I learned from FX Growth, I learned from Swaggy, lots of them. But I really learned a lot there. But then sticking to one thing really changed the game for me. Sticking to one thing, even when I had losing streaks. So it's really changed the game for me, sir. So that's what I would say about that. Okay. Emmanuel is asking, how can I open the Quaco synthetic indices trading account? Okay. Just head straight to their website. Head straight to their website, Quaco Marketing Indices. Let me just bring it up here. Let me bring the link and paste the link here. Quaco Market. So you should just go to the website. This is the link here. So that's the link. Um, okay, this is the link here. This is the link. So go to Paco Market, create an account today first. Once you create an account, on your dashboard, you will see an option for trading accounts. So just click on trading accounts. Make make sure to go for MC5 because it's only available on MC5. So click on MC5 and click on synthetic, and that's all, guys. That's it. It's very simple. It's not that hard. Okay, so Chedrak is asking, please, do you have any good book on gold? Yes, I have a book on gold. I have a book on gold. I shared that yesterday. I wrote a book on gold, mainly on my strategy I use, like from beginning to end. Those that got the book, I know like 5 people got the book yesterday. Yeah, so they could testify. They could testify. Like even if maybe on the last day I would show you different people that only got the book. The book really changed their life. It's more like me pouring out my whole 1 year experience with trading gold majorly. You understand? All things I learned, the different trading concepts, different trading patterns, different um chart patterns that happens on gold majorly. You understand? Because I don't say candlestick patterns, but chart pattern. Because more, let me just say it here too. The chart pattern that works very well, that happen most of the time on gold, is symmetrical triangle patterns. Like it happens a lot on gold. That's the chart pattern that happens more on gold. Yeah. So this is the link to the book here. This is the link to the book. So if you still don't want the link, just come DM me on Instagram. DM me on Instagram and I'll send you the link to the ebook. Okay, let me see. Jonathan also asked, what pace does this strategy work for? This strategy, the pair it works for, I mentioned it yesterday, GBP JPY, it works very well there. It works on silver, XAG USD. It works. Those are the two pairs that I've tested it like full time. I've traded those two. It works crazily on those two. You get okay. So would Clinton is asking, please, would the recording be posted on the Telegram? Yeah, sure. It will be posted on the Telegram channel. So if you're not on the Telegram channel, head straight to the Telegram channel. Let me drop the link again. Let me drop the link again. All these things, once this video ends, everything will be available in the description box. All the links you need is in the description box of this video, of this particular video. I've even put everything now. So in case you are looking for a particular link, this is the link to my Telegram channel. So if you are not there, go join because after this live class, I'll be dropping signals maybe twice a week or all depending on gold and maybe any other pair that I wish to. But gold majorly. Gold majorly. Okay, let's continue. Emmanuel is asking, please, which platform can I follow you closely? Constantly and keep your mentor. Instagram. I'm very, very active on Instagram. I'm very active on Instagram. And I've showed you my Instagram account. Um, Jonathan Chineye is asking, is it good to hold trade for a long time on a small account like $50? It all depends on what you are seeing. All depends on what you're seeing. Because me clearly from this growth, I know the trend will soon start to change. It's changing already. But I'm looking for, let me go back to the charts. This is what I'm looking for first before I would know that yes, it's time for this trade to, it's time for it to change. Let me just show you guys something real quick. And it's from the pattern I showed you guys yesterday. Pattern. This level here, this level, which the market is coming to. It should get into this level, then push up to this point, creating a big double top. Then from there, everything will be story. You start seeing the change of trend. Just mark what I'm saying today. Yeah, that is if it does not take off this level, we don't predict, but we react, following what the market shows us. But then again, this is just what I'm seeing clearly. Comes to this level, push up to here, creates a big double top, and starts to up. Why? Remember the wave pattern I showed you guys. This was the level when it broke out. It's supposed to retest from this level and continue up. But what happened? It took out that level, came down. Maybe it will obey this level, go back. You shouldn't go beyond it. That is, if you wanted to hold this trade to from yesterday, it's going to take long. So because of what I see, I might hold it from yesterday. So from there, down. But today's Friday, the market is going to get close very soon. So no trading again possible to Monday. So from Monday we'll see what the market is going to show us. So okay. Um um Casey is saying, Mr. Toshi, your gold ebook is on spot. Thank you. But you see, the gold ebook. How I wish I could share some file here online with see. I talked more on how to pass top pens. I talked on psychology, almost just like a full course, just like a full course. Let's see for other question. Thanks a lot, Casey. Okay, Anthony is asking on the chat now. What do you look out for if you want to do something? I just explained it now. I just explained it now. That long move to that upside. Then once you create that double top there, selling aggressively, you might hold it way down to where any trend line starts from. From might hold it to this level at least. So if it comes here, respect here, start going up, then know that it's coming to this level. And once it comes to this level, then the trend is changing from that uptrend to a downtrend. So the next thing you see, it push to the downside, and if you can hold it from here, maybe it shows you a bearish momentum here, hold it from here, then it would come way down from here to here, from here to this level at least, to this level. It's not a small thing, it's from here to here, let's see how many pips. It's not small. It might look small, but it's not small, guys. It's not small. This is the daily time frame. You should know. This is 947 pips, and not to talk from here now to here. That's 2,220, 250 pips. Guys, you should, that's that's crazy, guys. That's crazy. Just watch that. Just watch that. I'll keep you guys posted on the Telegram channel. So if you have not joined this special Telegram channel, join. I'll keep you guys. Okay. Someone is asking, is there discounts for the ebook? When I launched the ebook, I did discounts. I cut it out. It's very cheap looking for discounts again, guys. It's very cheap. It's just 10,000 naira here in Nigeria. Sorry, 10,000 naira compared to what. And again, it comes with a free mentorship. So you see, that's a big catch. I, I have a free mentorship already going on, so it's comes with a free mentorship. So once you get the, you just DM me on Instagram with the word mentorship, and I'll add you up, add you up, add you up. People in the mentorship group are really doing something crazy. Those are already paid, knows what's going on there. They are really doing something crazy, yeah. So free mentorship, free lifetime mentorship. Because normally I'm just doing what's replicating what Mr. Dev did for me, you understand? So free mentorship. It should be strictly free, but I'm using that because some people will still not value it. So just get the ebook. It's very cheap compared to it's more like an handout for the training, for the mentorship and everything. It's like a handout because most of the thing I'll be teaching is from that ebook and everything. So if you think it's good for you, you can come up. But if you have another strategy, then what you should work on is reasoning and psychology, good psychology. Then no point joining you guys. So that's it. Okay. Please, let me look for a question. Something. Um, okay. Sometimes it doesn't get to 1:2 before reversing. The profit tends to either break even or else. Yeah, how do you treat that? That's why I said before you place a trade, you make sure your TP is in a very good area. Don't just place your TP randomly at any point. Like maybe let me just put the TP there. No, calculate it. Where am I putting this TP? For me, for gold, gold must move from zone to zone. That's why I'm confident at, like putting it in a zone. So once it comes to a zone, I start reacting. And I look from the bigger time frame and I say, okay, no, this thing might reverse from here. I would know because it's already in the zone level and from the bigger time frame, it's showing me something maybe I was not seeing from that smaller time frame. So you should know. Once a trade wants to go against you, you should know because it start taking out some levels. You understand? So for that is for gold because it moves from zone to zone. But I don't know for other pairs. Yeah. Okay. What's your advice? Okay. Someone is saying, please, you advise we should DM you on Instagram with an evidence of payment. What if I'm not on Instagram? Is there any other means I can send my evidence which qualifies me to join your mentorship? Yep, you can do that on Telegram. So, yeah, my content is not hidden on Telegram. So. I know some people start running to that place now. It's not hidden, so you can just. Let me just. I will add a discussion room for the Telegram, just in the Telegram, so where you can chat, do everything. So I will add that. But again, you can just DM me on Telegram. Yeah, Samotoshi, or just join the Telegram group, and you see my content there. It's not hidden, but who's not on Instagram? Everybody should be on Instagram. Okay, okay. So what's next? Okay, someone is asking, please, is it good to check high and low of the week on gold? Nope, 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 nope. High and low, high and low of the week does not work on gold. I've tried it. I jumped from GPS, but it works perfectly on GBP. Works perfectly on other pays, yeah. But on gold, no, it doesn't work. It doesn't work. I've tested it. It doesn't work. So that's why I removed. ILO was one of the conferences I used on GBP so I removed it and added other conferences like the F and R. Before I was using moving average, and other conferences, but I had to drop it. Make it simple. Keep it simple, guys. Okay. Which other questions again? Someone is still asking link to the ebook. Ah, I've dropped it over and over again. Let me drop it again. But if you don't still get it, just DM me on Instagram at Samotochi on the call and I'll do well to send you the link. High and low of the week doesn't work on gold, please. Yeah. Okay, let me see. Pro boy is saying, boss, please, how does this different time frame works? Most especially the lower time frame. So what so does it mean that if I place a trade on 15-minute time frame, for example, I will make more money? Nope, 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 nope. The only place you should pay attention to is risk reward. Yeah. Why we go to the smaller time frame for entries is because we are this thing day traders or scalpers. That is for day traders. Only swing traders place trade from bigger time frame. So we are day traders. So we don't want to hold trade. Imagine going on the 1 hour to hold trade to place trade. The levels to levels from 1 hour is going. It might look small on the 1 hour time frame, but it might take very long to happen. From that, you understand, we don't want to hold trade beyond a week max or 2 days, one day. At least me sef, I don't like holding trade overnight. Ah, the last time I held trade overnight, I couldn't sleep. I told you guys I'm very aggressive in my entry, so I couldn't sleep. So since then I tried as much as possible to avoid that. I tried as much as possible to avoid that. So that's the link on the screen. Okay. Um. So someone is asking, make a full detailed video on. I have a full video on that. Let me see whether I can get it on YouTube. I'll share the screen now. Let me show you guys. Let me share my screen on YouTube. So let's go. Let's go. Let me go. I have a course on that. Let me go on my YouTube page and show you the particular video you should look for. This is my YouTube channel. In case you are not subscribed, just go straight subscribe there, guys. Okay, this is the video you should pay attention to. Why I talk more on this this particular video. Hope you are seeing it, guys. Simple Forex, simple XAU strategy index. I talked of it. I talked of it on this video. But this video was 8 months ago. Yeah, 8 months ago. So just pay attention to the one I did yesterday. But if you still really want to learn it, you can still come in for more knowledge. And this is the one I did on GPUSD too. So I shared the strategy here on GPUSD. So that's those two videos for those GP here, gold here, and this is how to day trade a swing setup. If you see a swing setup, how do we day trade it to maximize it? And other helpful videos I did too, other videos too that I still did I did too. So that's it, guys. Now let me show you the risk management calculating tips on gold. This is the video here. It's one of my old videos 1 year ago. This is how to calculate tips on gold and how to plot psychological levels on gold. These two videos. So you need to come watch these two. How to calculate tips and psychological levels on gold. So that make sure to watch it to understand. For those that does not know how to calculate it on gold. Okay. Boss, please will you let me see. Trend is saying, boss, please, will you advise me to sign up for a month mentorship or a 6 month mentorship? Month mentorship or a 6 months. Is this billions to cash out? I don't know. Please specify. I don't really know which one you're talking of. Okay, so which one again? Let me see if there's any other questions before we call it a day. Um, Rich Honesty is saying, sir, please, in the mentorship, which pair of is the major ones you look at? Which sits in the mentorship? I don't just force you to stick to a particular pay because I'm trading a particular pay. No, no, no. No. I learned to do USD, but now I'm trading gold. You can see. So most of the people in my group, some of them trade synthetic, some of them trade GBP what I do is just teach you, and with the knowledge you've gotten, you know how to maybe trade other pays. Some of them trade different stuff. Some they trade different stuffs, guys. They trade different stuff. So there are different pays, but the one I stick to is gold and GPS. If you join my mentorship, that's the two course I do with send gold and GPS. But from what you will learn from there, you'll be able to trade other pays. So that's just it. That's just it. Okay. Someone is asking this question. Anthony say, what time do you close all your trades a day, even if it has not? Once it's New York session. New York session starts from is it 1 o'clock to 10 p.m. So once it gets to 8, 9, and it's getting close to 10 p.m. and that's when New York session will close. So I like closing up the trade. But whenever I see something good, which is because I don't hold it during the weekend, since it's still during the normal week working days, I might still want to hold depending on what I'm seeing. But max, once it gets to 8, 9, guys, 8 o'clock, I'm closing. Right? Someone is asking in your mentorship, will you mentor? Nope, nope, nope. What I mentor, the free mentorship is just currency pairs, gold, GBPUSD, and how to become profitable overall. But if you want to work on synthetic, I have a course on that. I made mention of it on my old video, my last video, sorry. Let me show you guys this. I made mention of it here on this particular video here. This particular video here. So if you want to join the synthetic course, you want to learn how to trade synthetic, this particular one. So that's it. Okay. So can one specialize on just yes, there's a lady, Pressy Babe, if I'm not mistaken. She trades majorly synthetic and sometimes currency based. So it's very possible to specialize. It does not mean that all synthetic does not respect SL. No, some of them respect SL. Like on Paco, the ones that respect SL is Swift and Power. Those two respect SL. So yeah, sure, you can. One can specialize on it. Okay. Um, what else? What else? Someone is asking on my mentorship group, is there signals drops? Is there signals drops? That is, if I get it, do I drop signals? No, I don't. Only once in a while or once in a blue moon. Because I train you guys to being able to analyze yourself and take signals for yourself or generate signals for yourself. Because if I keep dropping, sometimes my listen, my view from someone else might not be the same, and because of mine, he might go to change his. You understand? And funny enough, his own might be correct. You understand? And because he saw mine, he will just end up changing it. So I don't do that. I only teach you how to generate for yourself. So, but once if I feel like I'll drop, I'll drop. Yeah, I'll drop. Okay, but I'm working on um, starting very soon because since I'm going to be active on Telegram, dropping signals and everything, I might end up start dropping day too. But I don't want to distract people that are really diligent learning. You understand? So that's it. What time do you start this online class? 5 5 p.m. Nigerian time, GMT +1. That's that's the time we start. And tomorrow is the last day though, because it's a 3 days live class. So you should join my Telegram for more update and everything. So my Telegram channel is here on the screen. So just join the Telegram channel. Okay. How long does it take? How long does it take you to be profitable when you I used to say time with that number. You should see my story on on YouTube already. So why ask? Okay, maybe you didn't watch the video. On this video, I talked to you on how long it took me, but it just took me. I'm just 1 year old, like subscribed fully in mentorship. I joined Mr. Jeff early last year, and I'm just a year old. Early years last year, that's when I joined Mr. Jeff. So 1 year and some few months here, because they say February I joined Mr. Jeff. So 1 year and 2 months and so that's it. But I started learning 2021 August. Then I joined Mr. Jeff 2022 February, and that's it. Okay. Is your mentorship held visually? No. Okay, I don't know. Visually could be maybe on Zoom or and so on. Yeah, sure. But if it's physical, no, not physical. It's online. So we have 2 days, Wednesdays and Friday. We host Wednesdays and Friday. So I think that's all, guys. I'm tired. I'm sweating already. I'm saying, oh, someone is asking how many months. I said lifetime mentorship. How many months? There's no month in lifetime mentorship till you become profitable. That's, that's it, guys. That's it, guys. I'm getting tired already. I'm getting if you're okay, someone say I'm SMC, smart money concept trader. Just if your strategy is good, if you trust your strategy, if you know what people are making money from smart money. Smart money, I know smart money traders too. I know lots of them that I'm like close friends with. So they are making money. So if you got a strategy already, no point changing your strategy. No point. Just work on risk management and psychology. That's all. That's all. Strategy is never the problem. It's risk management or psychology. Okay. Someone is asking, what would you advise to upcoming traders? Man, just remain consistent. Keep doing your thing, no matter what, no matter the losing streaks. Even if you have not gotten it, maybe you learned a strategy from YouTube today, and next week it's looking as if it's not working. But what you should do more is strategy is not the problem, guys. Strategy. That's why I held this class so I you see that strategy is not the problem. So the problem you might think it's strategy. I have not gotten the best strategy. I'm not gotten this strategy. This person has not taught me well. He's hiding something. No, it's not hiding anything. Mr. Jeff said his strategy is on YouTube free, but nobody knows. People will just be like it's hiding. It's not hiding anything, guys. When I joined, I knew that it did not hide anything. So strategy is not the problem. Just risk management and good psychology. If you have the best psychology in trading, then your learning period would be cut half. So, okay, what's your advice do you have for students? Yeah, if you are learning, if you're a student, I have students too in my mentorship, but um, advice for students. Okay, what I would say, maybe Forex. Ah, it might not be easy depending on the kind of um, course and everything you are doing, but people are still people are still making out time to at least maybe even if you give yourself 1 hour a day, it's good for me. At least give yourself 1 hour just to look at the chart for 1 hour and maybe go and concentrate. At least you have 24 hours a day, so just or 12 hours during the day and 12 hours in the night. But at least give yourself 1 hour from those 24 hours a day. 1 hour, just look the chart, look at some things and run out. You are good to go. You are good to go. If you can do that consistently, guys, you still learn something still learn something. So that's it, guys, for today's um class. That's it on today's class. Till tomorrow, same time. See you guys tomorrow, same time, 5 p.m. Nigerian time. That is GMC plus one. So see you guys tomorrow. See you guys tomorrow. I really appreciate you all for coming for tuning in here. So if you are looking for the links to all what we discussed today, just go this video description box of this video. You see the link there. I just added it, and don't forget to follow me on Instagram. Follow me on Instagram and subscribe to my YouTube channel because I do drop great stuff there and I will be dropping more. You understand? So subscribe to Samotoshi on YouTube. That's it. Leave it here. Samotoshi on YouTube and um, follow me on Instagram at Samotoshi underscore NG. Twitter also at Samotoshi underscore NG. Same username. And Telegram, don't forget to join. All the links are in the description box. So see you guys. Thanks for coming in. Have a great day. Yeah. So, yeah.